and Part B of House Report Number 119-399, offered by Ms. Waters of California.
Pursuant to House Resolution 936, the gentlewoman from California, Ms. Waters, and a member opposed, each will control 5 minutes. The chair recognizes the gentlewoman from California.
I rise in support of this amendment originally offered by my colleague, Representative Garcia. Ms. Garcia's amendment would make law an important requirement that was already carefully considered and made final by FinCEN, but which has been delayed potentially indefinitely under this administration. Her amendment requires foreign hedge funds to put in place anti-money laundering policies that will ensure the safety of our markets and prevent bad actors from using these funds to launder criminal profits. During a time when our markets are seeing unprecedented fraud and abuse, we should not wait to increase AML protections. We should not wait for FinCEN. We should do what we can to strengthen our markets now. I reserve the balance of my time.
The gentlelady reserves. For what purpose does the gentlewoman from Missouri rise?
Thank you, Mr. Chairman. I rise to claim the time in opposition.
The gentlewoman is recognized for 5 minutes.
Mr. Chairman, I rise in opposition to this amendment, which would impose sweeping new regulatory requirements on investment advisors and hedge funds serving foreign clients. While combating illicit finance and addressing national security threats are critical objectives we all share, this amendment takes the wrong approach, one that FinCEN itself recognized as flawed. Let's be clear about what happened. The Financial Crimes Enforcement Network, FinCEN, proposed a substantially similar rule and then postponed it before implementation. That postponement wasn't arbitrary. It came after careful consideration of the rule's operational challenges, its compliance burdens, and questions about its effectiveness. This amendment would impose requirements that even the agency charged with combating financial crimes determined needed further review. Investment advisors are already subject to robust oversight under the Investment Advisors Act of 1940. They owe fiduciary duties to their clients and must comply with comprehensive federal securities laws and regulations. The SEC has extensive authority to examine advisors and enforce compliance. Moreover, imposing duplicative know your customer and anti-money laundering requirements specifically on foreign clients creates a two-tiered system that could harm U.S. competitiveness in global capital markets. International investors would face additional barriers when working with American advisors, potentially driving capital and business relationships to foreign jurisdictions with less stringent oversight. If we believe gaps exist in our anti-money laundering framework, the solution is thoughtful, coordinated rulemaking by the appropriate agencies, not legislating requirements that are still under active consideration by FinCEN. I urge my colleagues to reject this amendment and allow our Financial Crimes Enforcement Agency to develop effective, practical solutions rather than imposing requirements they themselves abandoned. I reserve.
The gentlewoman reserves. The gentlewoman from California is recognized.
Mr. Speaker, I reserve the right to close.
Prepared to close.
From Missouri has the right to close. The gentlewoman from California is recognized.
She just said the gentleman.
So what? I reserve the right to close. So he's saying no?
Gentlewoman from Missouri has the right to close.
Has a gentlelady.
Gentlewoman from California is recognized.
Okay.
Mr. Speaker, I believe I have the right to close. Are you indicating that I do not have the right to close?
from Missouri has the right to close.
Manager in opposition to the amendment
And the manager in opposition to the amendment
because she is the manager.
because she is
A manager
a manager
in opposition.
in opposition to the amendment.
Is he saying she has the right to close?
I'd ask the chair who's closing first, the gentlelady from California, Ms. Ranking Member Waters, or myself?
What is she saying?
The gentlewoman from Missouri has the right to close
Who has the right
last.
to close, me or her?
Thank you, Mr. Chair.
The chair recognizes the gentlewoman from California.
I have the right to close?
You do not.
So what? So what? Then, if I don't have the right to close, I'm prepared to close, and I yield myself the balance of the time.
The gentlewoman
I-
is recognized.
I encourage all members to vote yes on Ms. Garcia's amendment to strengthen Bank Secrecy Act and anti-money laundering requirements for foreign investment advisors. This reasonable and well-considered provision will ensure increased safety for our markets from abuse by terrorists, prohibited entities, and other bad actors abroad. And I yield back the remainder of my time.
The gentlewoman yields back. The gentlewoman from Missouri is recognized.
I thank you, Mr. Chairman, and I rise one more time in closing to oppose this amendment by Mr. Garcia that requires investment advisors and hedge funds to perform know your customer verifications and implement money laundering procedures for foreign clients. It's a sweeping new regulatory requirement on investment advisors and hedge funds that serve foreign clients. I want to be clear here that if we believe that any kind of gaps exist in our anti-money laundering frame, the solution is that we have is thoughtful, coordinated rulemaking by the appropriate agencies. And obviously, FinCEN is still actively considering how to move forward. So, again, I would urge my colleagues to oppose this amendment, and I yield back.
The gentlewoman yields back. The question is on the amendment offered by the gentlewoman from California. Those in favor say aye. Those opposed say no. In the,
Request a
in the
recorded
opinion of
vote.
the chair, the noes have it. The
Request a recorded
amendment-
vote.
Me too. Pursuant to Clause 6 of Rule 18, further proceedings on the amendment offered by the gentlewoman from California will be postponed. It is now in order to consider Amendment Number 4, printed in Part B of the House Report 119-399. For what purpose does the gentlewoman from California seek recognition?
I have an amendment at the desk made in order by the rule.
The clerk will designate the amendment.
Amendment number 4, printed in Part B of House Report number 119-399, offered by Ms. Waters of California.
Pursuant to House Resolution 936, the gentlewoman from California, Ms. Waters, and a member opposed, each will control 5 minutes. The chair recognizes the gentlewoman from California.
I yield myself as such time as I may consume.
The gentlewoman is recognized.
H.R. 3383 seeks to provide small businesses with more opportunities to access capital. A key avenue for most small companies to raise money is by seeking investments from a small number of accredited investors. These offerings made under SEC Regulation D are exempt from registration with the SEC. However, these companies are required to file basic disclosures with the SEC on Form D, which is available to the public. The information provided on Form D is often bare bones, incomplete, or false. This makes it difficult for investors to understand the parameters of an exempt offering. What's worse, many bad actors located in the United States and all around the world are using Reg D to misrepresent that they are SEC compliant, using false information on Form D and posted to the SEC's public database, EDGAR. These fraudsters tell unsuspecting U.S. investors that they are registered with the FEC. We must stop these bad actors from using Form D to take hard-earned money out of American savings and putting it in the hands of criminals. My amendment aims to fix this problem by requiring additional information about the identity of the company and the scope of its offering prior to making any sales. My amendment also requires a company to update Form D when there is a mistake or material change in the information and when the offering is complete. Furthermore, to prevent fraud, the amendment requires Form D filer to provide additional verification of their identity. Who are they? Such as registration with the State Secretary of State, and to certify that the information in the Form D is accurate. Now, providing false information on Form D would expose the filer to criminal penalties. Form D reforms are a key priority for our state securities regulators. They argue that many bad actors are harming legitimate businesses needing to raise capital under SEC's Regulation D, and that Form D reforms would lead to more capital formation. This is simple. It's very clear. I urge my colleagues to support this amendment, and I reserve the balance of my time.
Gentleman from California reserves. For what purpose does the gentlewoman from Missouri seek recognition?
Mr. Chairman, I rise to claim the time in opposition.
The gentleman from Missouri is recognized for 5 minutes.
Thank you, Mr. Chairman. I rise in strong opposition to this amendment, which would pose a significant obstacle for the same small businesses and startups that we aim to support. These proposed new requirements would act as a speed bump for smaller issuers. These are not massive Wall Street institutions. These are often first-time founders, small businesses, and innovative startups relying on 50cc to raise essential seed and growth capital. Adding complex or ambiguous new filing requirements diverts their precious time and scarce resources away from the innovation and job creation and towards burdensome compliance. These additional disclosure burdens will actively discourage the startups and small businesses that desperately need access to this private market capital. They will choose to forego fundraising altogether rather than navigate this complex, costly, and legally risky environment. In fact, the Securities and Exchange Commission has examined similar ideas twice in the last decade, and in both instances, the market's response was a resounding chorus of concern. In both cases, the message was clear. New filing or disclosure obligations would significantly raise costs and ultimately chill early-stage capital formation. We should be focused on expanding opportunities for American entrepreneurs, not erecting new bureaucratic barriers. We must prioritize a system that makes it easier, not harder, for startups and small businesses to secure the capital they need to grow, hire, and innovate. I urge my colleagues to reject these unnecessary and harmful reporting burdens. I reserve the balance of my time, and I request a no vote on this amendment.
The gentleman reserves. The gentleman from California is recognized.
I reserve the balance of my time.
The gentlewoman reserves.
Thank you, Mr. Chairman. I now yield 2 minutes to the gentleman from Pennsylvania and sponsor of the access capital in this package, Mr. Muser.
The gentleman is recognized.
Thank you. I thank our Chairwoman Wagner for your leadership, and in all due respect to our minority leader, I oppose this amendment. I do support the INVEST Act, led by Chairman Hill and Subcommittee Chairwoman Wagner strongly. The INVEST Act broadens opportunities for everyday Americans to invest in public and private markets, expands access to capital, facilitates capital formation, promotes transparency, and helps charitable organizations build retirement security for their employees, For example, it allows people to invest in private markets based on their knowledge and experience, whereas previously they could only qualify based upon their income. It encourages new public companies to issue more shares without burdensome regulations, Mr. Speaker, so they can focus on hiring and expanding instead of diverting limited resources to filing paperwork with the SEC. And thanks to Representative Heisinger's leadership, investors can now access important disclosure forms electronically for the first time instead of only on paper through the mail. The INVEST Act also includes my bill, H.R. 3645, the Access Act, which passed the Financial Service Committee earlier this year, 51-0. Right now, if a small business uses crowdfunding, which is raising money online for everyday people who want to invest, the moment the business raises more than $100,000, they have to pay for financial statements that can cost up to $10,000. This makes this an improved situation. For many startups, that's a huge chunk of their money that they're trying to raise. So the Access Act simply lifts the limit to $250,000 so small business can raise the early capital they need. Its inclusion in the INVEST Act is a significant bipartisan step towards making capital formation more practical and affordable. This legislation puts everyday Americans first and uses the strength of our capital markets to fuel growth on Main Street, not Wall Street. The INVEST Act is a major win for workers, entrepreneurs, small businesses, and I support its passing. Thank you, Mr. Speaker.
And I yield myself the balance of the time.
The gentlewoman is recognized.
I encourage all members to vote yes on my amendment to strengthen information for people investing in private markets. As the opportunities to invest in private companies grow, in particular through measures promoted in this bill, we must take steps to ensure that investors are provided with accurate and complete information about what they're investing in. These are simple, common sense protections that will make a big difference in ensuring accountability for exempt offerings and preventing the proliferation of fraud around Form D filings. I yield back the balance of my time.
The gentlelady yields back. The gentlewoman from Missouri is recognized.
Thank you, Mr. Chairman. I simply urge my colleagues to reject these unnecessary and harmful reporting burdens, and I would ask that they oppose this amendment, and I yield back.
The gentlewoman yields back. The question is on the amendment offered by the gentlewoman from California. Those in favor say aye. Those opposed say no. In the opinion of the chair, the noes have it. The amendment is not agreed to. It is now in order to consider Amendment Number 5, printed in Part B of House Report 119-399. For what purpose does the gentlewoman from California seek recognition?
I have an amendment at the desk made in order by the rule.
The clerk will designate the amendment.
Amendment number 5, printed in Part B of House Report number 119-399, offered by Ms. Waters of California.
Pursuant to House Resolution 936, the gentlewoman from California, Ms. Waters, and a member opposed, each will control 5 minutes. The chair recognizes the gentlewoman from California.
I rise to offer an amendment that would make junk fees illegal and require investment firms to clearly disclose the other fees they charge. For far too long, Wall Street has been charging junk fees that sap the investment returns of hardworking Americans and make it harder to save for retirement. This amendment makes clear that an investment firm, be they an investment company, an investment advisor, or a broker-dealer, cannot charge any fees that are either not clearly disclosed to investors in advance or exceed the value of the services provided. These could include dubious fees like account closure fees, excessive markups, and undisclosed compensation or sales arrangements, inactivity fees, and so-called regulatory compliance fees. In addition to outright banning junk fees, this amendment requires investment firms to clearly disclose to their customers in advance any fees that they charge that customer. Investors should not face any surprises when it comes to the cost of investing their savings, and making sure that investors clearly know the risk and cost of choosing an investment firm or product should receive unanimous support from all members of this body. Finally, this amendment would bring unprecedented transparency to how investment firms profit from the fees they charge investors. These firms would be required to annually report to the SEC the total profit earned from fees as a percentage of assets under management. The SEC would publish this information on a public database similar to broker check, along with a visual that shows whether these fees are high, low, or average when compared with their peer firms. By making this data public, American investors would be able to know how the fees charged by their investment firms compare to others, and would also create market pressure on firms to make savings for the future more affordable for Americans. Because this amendment is a common sense solution that protects investors and brings accountability to the industry, I strongly encourage all members to support this amendment, and I reserve the balance of my time.
The gentlewoman reserves. For what purpose does the gentlewoman from Missouri seek recognition?
Mr. Chairman, I rise to claim the time in opposition.
The gentleman is recognized for 5 minutes.
Mr. Chairman, I rise with strong opposition to this amendment, which represents a fundamental departure from the careful, deliberative process that has guided the INVEST Act. Let me be clear about what we're being asked to consider. This is not a modest technical correction or a narrow clarification. These are sweeping, complex changes that redefine fee structures across the entire securities industry. They create new prohibitions, and they establish an unprecedented public ranking system for SEC registrants. It has never been vetted by participants, investor groups, legal experts, or Congress. It has not even been considered or marked up through the Financial Services Committee through regular order, the very process that every other provision in the INVEST Act has undergone. We are being asked to inject unexamined policy into a carefully crafted bill at the 11th hour. This is not how we should legislate, particularly on matters affecting trillions of dollars in American retirement savings and investment accounts. But beyond the procedural concerns, the policy itself is deeply flawed. SEC-registered advisors and broker-dealers are already subject to comprehensive fee disclosure requirements under existing law. They must provide clear, written disclosures about all fees and compensation. They are subject to fiduciary duties or regulation best interest standards that require fees to be reasonable and in clients' best interests. This amendment creates vague, undefined standards about what constitutes a fee that is, quote, not proportional to services provided. Who decides proportionality? By what standard? This invites endless litigation and regulatory uncertainty that will ultimately harm investors by increasing costs and limiting service offerings. I urge my colleagues to reject the substantively flawed amendment, and I yield back. I reserve the balance of my time.
The gentleman reserves. Gentleman from California is recognized.
I'm prepared to close, and I yield myself the balance of time.
Gentlewoman is recognized.
I urge all members to vote yes in support of my amendment to prohibit junk fees and make all other fees more transparent to investors. My amendment will make sure that hardworking Americans are safe from undisclosed or unreasonable fees, will require advance notice on fees before they are charged to an investor, and will make public the amount that financial firms earn from fees. I'm sure you can agree every American should have a right to know what they're paying for, and that is why I'm asking for a vote on this amendment. We have been indicated by the supporters that they're so pleased for this debate that we're having this evening. They have indicated it is long past due that consumers have this kind of advocacy and that consumers have this kind of support from the members of Congress who understand the ripoffs and the fraud and the disrespect that they have received for far too long. This amendment is supported by all of those organized unions and by the advocacy groups that I have spoken about earlier this evening. They all support this amendment as they support the bill that we have been working so hard for. And so with that, I yield back the balance of my time.
The gentleman yields back. The gentlewoman from Missouri is recognized.
I thank you, Mr. Chairman. And as we come to a close on what I believe is the final amendment of H.R. 3383, the INVEST Act, I want to thank my colleagues who have been so bipartisan in this package of 22 amazing capital formation bills that are going to lift up retail and mainstream investors, going to grow small business and entrepreneurs, and make more companies the possibility of having the capital for them to go public. I want to thank my wonderful co-lead, Mr. Gregory Meeks from New York and Josh Gottheimer. I want to thank Chairman Hill for his tremendous support in this effort, my entire capital markets subcommittee, the staff and the team that has brought what is years and years of hard work together that's going to grow this economy, grow jobs, and grow the future of the United States of America and our economy. I want to thank the ranking member for the good, healthy debate this evening and the collaboration that we have. But I must say, still, Mr. Chairman, I would urge my colleagues to reject this specific amendment, and I yield back the balance of my time.
The gentleman yields back. The question is on the amendment.